Hello, 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 and welcome back to the podcast. Thank you very much for being here. Hey, if you guys like the podcast, please leave a review if you've been listening. If you have been binging me, kudos to you. Oh my gosh, it's amazing to me how many of you binge listen to all of this. Absolutely amazing, because like I say all the time, I don't know if I could do it, but I am happy that you are here and I am happy that you are finding this valuable. You know, sometimes I run out of stuff to talk about. Like today, I struggled, you guys, I'm not going to lie. I mean, I do a lot of these, 2 a week, here and without the bank. So if you did not know, I also have another podcast without the bank. That is not really super farm related stuff. And so go there and listen to those as well and subscribe over there. But I sometimes get like, what else can I say? I think I've said it all. And you guys, I can talk a lot. You know that. So if you have a topic you want addressed, please email me. I did have one of my awesome clients email me about a topic that she wants addressed. So I am working on that because hers was it was pretty good topics and pretty intense that I have to actually do a little bit of work on those. Okay, so today I want to talk to you about premium financing because this has become a serious issue. And then I want to, and with that, we're going to roll into how the market is affecting some of these policies. So in my last podcast, I talked about universal life, variable life, and indexed, and how those are all affected by the market and all those things that are going on. And I also got an email from a client last week that we had a very long conversation. He sent me a Excel spreadsheet of another agency that is trying to do premium financing with my farmers. And I've gone over this before. I'm not going to go over the numbers and really in depth. I did do one with Wade Borth, so go back and listen to that one. It's just about the exact same concept is what these guys are selling this client of mine, or trying to sell this client of mine. But I want to go over it a little more intense because I am seeing it at astronomical levels in the last 2 weeks. These guys have great marketing plans, which I can appreciate a good marketing plan, but they're liars. They're flat out liars. And I just cannot sit back. I am here. You guys know that. I am here to save a farming industry. I am here to help change the way farming is financed. We have got to save this industry, and we are not going to do it with what ifs. We have to have some guarantees. If you have enough what ifs. Well, what if it rains? What if it doesn't rain? What if the market goes up? What if the market doesn't go up? Yeah. What if fuel goes up? What if fertilizer goes up? What if, right? What if the bank gives me money? What if they don't give me money? That's basically what you guys are living on is what ifs. Then these slimy agents come in and they say, oh, hey, let me owner premium finance that for you. So basically what I saw last week was a client that has $3 million of equity in his land. $3 million. That's not a lot of money. I look at his premium and it's for 15 years. $12.5 million. I said, how much is your land worth? $3 million. I said, the premium is $12.5 million over the next 15 years. How are you going to pay for that? Oh, well, for the first 3 years, I'm going to borrow from the bank against my land. And then anything after that, I'm going to borrow from the cash value to pay the premium. If you're going to have a loan on the policy, then who's going to pay the loan on the policy? Plus you owe the bank $3 million. So we owe the bank $3 million. And then we have to borrow from the policy to pay the policy premium every year of $900,000 million. So how's that all working? Well, I'm going to borrow from the policy to pay the bank off. And then the bank is going to have the life insurance policy as collateral. Okay. So I talked to him several weeks ago and I said, well, who's going to pay the interest on the policy? Or I said, I said, who's going to pay the loan on the policy? And he said, oh, I guess I didn't think of that. So we went back to this agent and said, well, I can't pay the loan on the policy. I'm not going to have that kind of money. And the agent said, oh, that's okay. That's all right. That loan will just accumulate. It's no big deal. So I looked at the new numbers and I said, well, there's got to be compound interest. Now they're using an indexed UL. Go to last week. Go to my last podcast. It'll tell you what that is. He's using an indexed UL. I'm like, there's compound interest on that. Who's paying the compound interest on that loan? Because the interest is going to compound. So I look at the spreadsheet and there is no compound interest on. He's not compounding the interest. He's not even adding interest. He's just adding the loan amount. No interest, no compounding. I said, so this isn't even right. And he goes, oh, he must have overlooked that. That's a pretty big overlook, don't you think? I mean, my goodness, like we've got nearly $1 million loan every year that we're not adding interest to, and we're not compounding the interest from year to year. So the whole point of what these guys are doing is they're targeting farmers and they're saying this is a great way to save your farm and do an estate plan. By borrowing against the land to put it into a premium and then have the life insurance policy as collateral to that. So if something happens, the bank gets their money. And a lot of times there's a trust involved. And it's all about a rate of return. Because we want $12 million a death benefit, they gave him $21 million minus any loans that he will have. But the loans don't even include the interest and the compound interest on the loan. I said, so what happens if you absolutely cannot pay? Like, what if you don't have enough cash value to pay the premium? And he said, well, I don't know. And I said, this is a universal life policy. So he was actually being sold a universal life policy that was run at a 6% rate of return. But when he borrows the money, it's only making 4%, if it's making anything. So if it's making nothing, we really hurt the policy and the performance. But if it's only making 4%, we're 2% short on the premium of what needs to be paid to cover the death benefit. How is that saving a farm? I had a client yesterday that said, Mary Jo, I have my variable universal life policy. Every day I go in there, it's losing money. I'm losing cash value every single day because the market is crashing. It is directly, a variable universal life is directly tied to the market. A universal life is not as direct, but it is still tied to the market. You guys, this is huge. If you are being approached with this crap, or your friends or your neighbors are, it's complete crap. How can a farmer premium finance, borrow from the bank to pay the premium on a life insurance policy when all you do is live on what-ifs? And now we have a market downturn. This is insane. If this could be done, do you think I'd be doing it? If this was a good idea, yeah, I would be. But every single one of these I look at, it is not about liquidity and control. It is not about you being the banker. It is not about getting rid of the bank. It is using the bank to save a farm so I can sell you some life insurance to do that? This is so disturbing to me. And yes, it keeps me up at night because we are going to lose farms. And guess what we're going to say? Life insurance sucks. No, 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 no. Life insurance does not suck. What sucks is the slimy agent not telling you the whole truth, and you don't even know what questions to ask. I am so thankful that this client came to me and shared with me this stuff, because he was very much on the verge of doing this. And then when I informed him of what's going on, all of a sudden he's like, well, that's not a good deal. No, it's not. If this is what you want to do, we need to figure out a better way to do it without financing the farm and being able to pay what we can pay. Because right now we don't have the cash flow to do any of it. You guys, it's crazy. Think about that. Your farms are at risk. The very thing you're trying to save, they're going to ruin it with no guarantees. For what? It's insane. Okay. Pay attention to that. The market is crashing right now. Variable universal life policies are falling. You can see it every day. You can log online and see what's happening to your cash value. It's going down because it's directly affecting your policy. This market downturn is not helping a VUL, a UL, or an indexed universal life. It is not helping any of them because they are all tied to the market or reflective of the market. You guys, if you want some guarantees, if you want some liquidity, you need to understand the infinite banking concept. Nelson didn't sell anything but whole life for a reason. And that reason was so that we could be in control. Okay, let me know if you have questions. If you've not gotten the book, Farming Without the Bank yet, please go and do that. You can email me questions. You can email me concerns. If you have a topic that you want covered, please share that with me. Because sometimes I don't know what to talk about. Okay, you guys, you have a fantastic day, and I'll see you next week.